Welcome back. The rescue package may have passed Congress, but the battle to rescue financials and the financial system may not be so close. In the credit markets, outstanding commercial paper fell by a record 5.6% in the past week, making September the worst month ever for commercial paper. In fact, the commercial paper market is used by companies for short-term borrowing to cover daily expenses. Joining us now to talk more about that, what needs to be done to unclog the market, Wilbur Ross is Chairman and CEO of W.L. Ross & Company, along with Carlos Mendez, Senior Managing Director at ICP Capital. Gentlemen, nice to have you on the program. Welcome.
Good afternoon.
Wilbur, let me kick it off with you here. I guess one of the catalysts that had us do this story and this whole angle of this conversation is what happened with GE. GE selling stock and giving that 10% interest rate to Warren Buffett's Berkshire Hathaway. We wondered if, in fact, it was indicative of perhaps a tough going in terms of accessing the commercial paper market. How do you see it?
Well, I think that's certainly part of it. I think it was also likely a strategic move on the part of GE to make sure that they could keep funding GE Capital, because they feel, and I feel, that there are huge opportunities available to them. So I think it was both a protective move and a potentially offensive move.
Carlos, what do you think? What do you think it tells us about the commercial paper market?
Well, I think when you're looking at a company like GE, a AAA, a bellwether here in the United States, and it's having a hard time, mind you, 25% of their debt is short-term debt. So out of $360 billion, $90 billion is what they're accessing in the commercial paper markets. But that day when Buffett came in and made the investment on the credit default swap market, their protection went out to 750 basis points. You're talking junk levels. So it did get pretty dire there, Maria, and it was good for them. Now they're back around 550, so they definitely needed to put some certainty back to the company.
Now, you've got other companies that are very reliant on obviously rolling over a short term in the commercial paper market. Do you worry that now that we're seeing an industrial company, maybe that it's going beyond financial services, and we could see companies like AT&T or Verizon, or who knows, Textron, those companies that are so reliant on that market?
Well, certainly AT&T today, for instance, is all their commercial paper is all on overnight, one-day overnight. So, and it's trickling down. I think one of the biggest surprises is what's doing in Iceland right now. You have 3 banks who have 14 times the GDP of that country in commercial paper outstanding. They're having a hard time rolling it, and they're looking for a surrogate country to help them out. So it's definitely, way outside of the financials and now affecting even a country.
Wilbur, what about that? Do you see this going beyond financials?
Yeah, I think the problem is that the big buyers of commercial paper had been the money funds. And so as they have been imploding, they not only are no longer net buyers because of getting net additions, they're actually net redeemers of commercial paper. So some of it is just people being nervous. Others of it is technical reasons, like the money funds shrinking.
Okay, so how do you think this unclogs? I mean, what happens to sort of be the catalyst here that turns things around?
Well, I think that the $700 billion bailout bill, with all the foibles that it has, is a good start in that direction. I don't think it's the final answer, because it seems to me that the banks lost more than $130 billion more equity capital than they have re-raised. And if you take a 12-to-1 multiple, that's around $1.5 trillion that they've lost in lending capability. Everybody knows that, and so as the banks dry up and as the money funds dry up, people are just frightened because they're so shaken that an entity like an AIG went from an unquestioned AAA to where it had to be saved, and all the other savings that have gone on. So I think you got to get confidence back into the market before anything will really be fixed.
What about the Fed? I mean, do you think, Carlos, the Fed at some point will actually have to intervene here and lend to the commercial market?
Well, I think it's not over. We look at this package, we look at it kind of, trying to lasso an elephant with some dental floss. It's just not enough. Wilbur put some good numbers around it. But that, Maria, that may be something that, that's needed. But certainly capital. We need equity capital at banks and at companies. GE did it. They put some capital underneath them to shore up their balance sheet. We just need to continue to do this. We need Mr. Ross's money from his funds to come into these companies and into these banks. And we also need foreign capital. One of the things that we need to open up is foreign lending foreign investors to lend in the United States. Today, we tax those folks at a 55% rate. That has to go away. We have to bring some of that capital in there. So, Maria, I think the fix here is equity capital. I'll keep saying that over and over again.
What about that, Wilbur? Are you finding opportunities here? Are you willing to put your money to work?
Well, yes. As you probably know, we proposed a kind of alternative to the present bailout consisting of an insurance program, and we'd indicated we were willing to put $1 billion into that. We don't have as big a pocketbook as Warren, but for us, $1 billion is a pretty big commitment.
Absolutely. So where are you on that? Tell me how that plays out.
Well, in the bailout bill, unless they changed it, there was the main course, which was the direct purchase, but there also had been put in the potential for an insurance program instead. And the reason I think that, especially if supplemented by private capital, might be attractive to government is it eliminates government needing to put the money out immediately. It would provide, because of the federal insurance, it would provide liquidity to that paper. Therefore, people could access liquidity without actually the government having to write a check.
What else would you say needs to be done, Carlos, now that the bill is passed?
Well, I read Mr. Ross's plan, and I think it's I think it's one thing we can do. One of the issues there, of course, is that it calls for essentially rewriting a loan at the loan level, helping out the homeowner, but now at a new price, at a reduced price. And well, what does that mean? That means the bank takes an instantaneous loss. And that's got to be made up. And, right now these banks are thinly capitalized, and perhaps Mr. Ross would put some money into the bank when they wrote down all those loans. So, I think the things that he's outlining and some of the other alternatives that have been outlined all need to be brought back onto the table. This thing isn't over yet.
Wilbur?
Yeah, we've indicated we are prepared to put capital into banks. Federal Reserve recently liberalized somewhat the rules for private equity coming in, but they're still limited to a minority position in the banks. I honestly don't see any great reason for that. If investment banks and banks can be merged together, I really don't see what's the great fear that anybody would have to having a private equity firm own a bank. So I hope that as they search for alternative sources for capital, that they will liberalize further the restrictions on firms like ours putting money into banks.
And, of course, Wilbur, you've made a career out of finding the value in these distressed situations. So clearly you must be finding real opportunities here. Let me ask you this. When do you think the storm clouds will have moved at this point? How long do you think we're in this for, Wilbur?
Well, if you define the it as being the mortgage crisis and the real estate crisis, I really don't see that turning around for 4 or 5 quarters in the future. What I'm mostly worried about right now is that state and local governments, if California is anything more than just a one-off situation, are liable to be the next place where the economy gets hit. State and local governments added 242,000 jobs during the 12 months ended June 30th. But this year, they're forecast to spend a total of $2 trillion for the first time, and it's going to be very difficult for them to do that because all their tax revenues are in decline, just as the problem that California has. So whereas state and local governments have been substantial net adders to jobs, some of them, I think, are going to have to be net subtractors. Right.
Really important information there. Thanks so much to you both for being with us. It's always a pleasure to talk with you. Thank you, Wilbur.